defending the free market, and making the moral case for capitalism. The Justin Moore Show. Hey everybody, welcome to the Justin Moore Show, where we make sense of what's going on in this crazy, insane, out of control world. Now, ladies and gentlemen, I first have to apologize here. I did not have a show last week. That's because I had a cold, and because I'm not ahead on my episodes, I lost my voice and I couldn't really talk. And so I couldn't do a show. So here I am. And actually, I want to focus on this one, which just happened last week at Jackson Hole. You know, every year the Fed has their little conference there that's sponsored by the Kansas City Fed, Jackson Hole, Wyoming. And they give their speeches. You know, that's where Ben Bernanke, back in the day, where he launched his QE program, money printing. And a lot of people were thrown off guard with the speech at Jackson Hole by Janet Yellen because, you know, they were expecting, okay, let's hear what she has to say on monetary policy. You know, is she going to raise interest rates here soon? Or is she going to try to raise it a few more times before the end of the year? Well, we got none of that. There was no talk on monetary policy. But what she did talk about, I got to go back, and what I just said on my episode was out 2 weeks ago on my show, the last episode I did, where I'm talking about what Janet Yellen was, maybe that was the episode before, so 3 weeks ago, when I was pointing out what I think was really going on in Janet Yellen's head when she's saying we won't have another financial crisis in our lifetimes. And so the focus of her speech at Jackson Hole, and I read the whole dang thing, you know, she's pointing out, okay, look, oh man, I'm already starting to lose my voice already. See, I'm going to have to keep this episode kind of short. I'm going to lose it completely. Then I'll have laryngitis and I'll have to miss next week's show, and that's going to suck. Okay, so she talked about where we were 10 years ago, the financial crisis, what led to the financial crisis. Then she talked about how the Federal Reserve stepped in. They were the superheroes, and what Congress did. They passed the Frank Dodd financial bill. You know, all these things. So basically, we got more regulation, and she argues in her speech that because of what the Fed and what the Congress and the politicians did 10 years ago to react to the financial crisis, that has made our economy more resilient, and it's stronger than it ever has been before. And we have a strong economy now. Now, obviously, you know, listeners of this show and me, we definitely disagree with that. We do not see the economy as strong. We see the economy as very weak, and we are on the verge of another crisis. But there's a lot of people out there, they don't see it that way. They're looking at the numbers. Okay, yeah, the numbers aren't as good as they were before. You know, but you have to keep in mind, too, with a lot of these things that perceived, they can look stronger. Like, look at housing prices are back to where they were when they peaked in 2006 right now. So if you think that, oh man, people's debt to equity ratios are, you know, looking pretty dang healthy. You know, if you look at all these things and people borrow against their houses, you know, so that the consumer can spend, well, if we have reinflated the housing bubble, well, what happens when housing prices go back down? People's equity that they have in their house, that can just poof, it can vanish, just like what happened in 2006. You know, so it's not that stable. Things look okay until there's a stress on the system. Then you get to see all the cracks. But what we've seen in recent months, we are starting to see more and more cracks in this economy. And all the things that the Federal Reserve has done to make things supposedly stronger. You know, heck, since 2008, the Federal Reserve has started paying interest rates on banks that hold money at the Fed, that hold money at deposit at the Fed. So it's a way of subsidizing the banks. It's a risk-free rate of return right there. You know, you just park money at the Fed and just earn interest on it. You know, don't have to worry about lending it out. And so a lot of banks have taken advantage of that. Now, let me just read this was one little paragraph from Janet Yellen's speech. This is towards the very end. And she says, "So where do we stand a decade after the onset of the most severe financial crisis since the Great Depression? Substantial progress has been made toward the Federal Reserve's economic objectives of maximum employment and price stability in putting in place a regulatory and supervisory structure that is well designed to lower the risks to financial stability and in actually achieving a stronger financial system. Our more resilient financial system is better prepared to absorb, rather than amplify, adverse shocks, as has been illustrated during periods of market turbulence in recent years. Enhanced resilience supports the ability of banks and other financial institutions to lend, thereby supporting economic growth through good times and bad. Well, we go back and look at all this amazing economic growth that we've had. Being sarcastic, of course. Under Obama, he's president for 8 years. In his entire time in office, he never saw 3% GDP growth, which was unprecedented in modern economic times. So our economy has not been growing. And I've argued before on this show, just looking at things from the Austrian perspective, all these things that the Federal Reserve has done to try to, make things, try to improve the economy, lowering interest rates, injecting liquidity into the system, QE, the money printing, all that does, and what it has done, it's made us all poorer. And, it's the Keynesian view, and it's like the Paul Krugmans of the world, Krugmans, whatever you want to call them. They like to argue that, we need to avoid the liquidity trap, that it's this idea that, you can get to a certain point where you can throw all the money you want at the problem and keep interest rates low, but the economy, people are going to just save it because they see that, well, interest rates are already so low, they have to go up, and so they're holding onto their money, they're not letting go of it, so things aren't functioning like they should, and also with the Keynesian perspective, they see savings as bad. When you have an economic crisis, during 2007, 2008, okay, yeah, you got to lower interest rates. We need to encourage people to spend. We got to keep things going because they argue that, one person gets his income from another person's spending and that person gets his income from that person's spending. It goes on and on. It's a chain reaction. And so if the spending stops, then that's why the economy stops. That's what the Keynesians argue. But the Austrians point out, whoa. That is the exact opposite of how things really work in the economy. We Austrians, we argue, look, savings are crucial to a growing economy. That's what you need to make things and get things better in the economy. But the Keynesians see savings as bad. And so when the Federal Reserve injects money into the system, they look at that just as good. They look at printed money. It's just as good as money from savings from people. But Austrians see it, look, when people save money, then that's what leads to, then that is what funds these new projects. That funds the structure of production. So you can create more goods. You create goods more efficiently. New technology comes about from savings. That is how you grow an economy, is when you have more goods. And see, so many people out there, it's like they can kind of start to understand these things like, oh, yeah, that makes sense. But then you throw money in there, and people get so confused what money is. Anybody that's in my generation, the millennials out there, ever since 1971, the U.S. dollar, we've been on a complete fiat standard. So there's no gold backing. People don't understand what real money is. It's like, okay, I just got, as I talked about a few weeks ago on this show, talking about the money's this, money's that. People just want the more monies. People don't realize how money really functions. That money is really just a medium of exchange. That money it's a placeholder. So, you worked at a job or you traded your fruits and you got some money in exchange for the goods that you sold. With that money, whenever you do demand to buy goods, you can now go buy those goods instead of a barter economy where say you traded off your apples and you got bread in the barter transaction. Now in that barter economy, okay, you got that bread. So, but say if you have so much bread, like, well, hell, I can't eat all this bread. Now I need to go trade this bread off to somebody who wants bread so I can find something else that I want. Maybe I want peanut butter and jelly so I can make a peanut butter and jelly sandwich instead of just having bread on bread sandwiches. But money makes all of these transactions a lot easier because everybody demands money and people willingly accept money for their goods. So then it just comes down to agreeing on a price. Okay, this good for this X amount of dollars. Once you have that money, you can now go get any good you want in the economy. You don't have to try to trade, something else, try to eventually get what you want. So money makes things a lot more efficient. By having money in a system, an agreed upon unit that people trade in, that allows people to, that allows specialization in society. And with specialization, where people can, instead of everybody being a independent, self-sufficient farm, people can now be welders, mechanics, people can engage, people can be farmers, all sorts of different jobs, where at the end of the day, you all get more goods because you can specialize and you're just focusing on one thing. You all trade the same commodity, you all use the same money, so then you end up with an abundance of goods at the end of the day. That makes everybody better off. So money in the system, it's just a medium of exchange. People don't get that. Money is not a good in and of itself. If you just hold on to money, what good does that do you? Money is only useful to you because you can trade it for some good you want. Maybe you don't want any goods right now. Maybe you just, you like to save. You have a lot of money saved up. Well, eventually, you're going to want to spend that money on something. Or maybe you have a big purchase in mind in the future. You want to buy a new vehicle, whatever it is. You want a down payment on a new house. You want to buy some farmland. You're saving up for something. And so Keynesians don't see things in that way. That the kind of people just get screwed up and confused when money is thrown into the system. And they just see it as a completely different good, that the more money you have, the richer you are. So let's just print more money. No, you're destroying people's medium of exchange. So now that dilutes the value of the money you have saved up. So it makes us all poorer, people who are holding on to dollars. And so it's just amazing, all the confusion out there with just these, simple concepts. And, that's partly our job here too. We got to, try to educate those that are confused by a lot of these concepts. A lot of people are financially illiterate. I can't believe how many people I run into living paycheck to paycheck. I couldn't imagine living like that. Like you're chained up. You can't do anything. You don't have any freedom. But having a nice little nest egg, money you have for emergencies, or say if you want to do a trip at the last minute, you can't think, oh crap, no, I don't have enough money. I got to wait. I got to try to work some more hours for the next paycheck so I can go on this trip. When you can do things, say last minute, or you can just jump on opportunities, that just completely changes your outlook on things. And it really is just sad. Like when people go buy new vehicles, I hear people at my job where I work at United part-time, United Airlines. And just some people look, okay, yeah, well, this is what I can afford a month on car payments. So they're looking at a car they're just looking at the payments instead of looking at, well, what are you paying the total cost for your car? And looking at the total cost of what you paid for the car, what you negotiated, is that a good deal? They're just looking at, no, $230 a month payments. Okay, yep, I can afford that. Yep. So it's just, that mindset to me is just, it's mind-boggling. I really can't imagine, but most people out there do live like that. Actually, I think I heard a statistic, what is it, like 60% of people out there today in America, they're living paycheck to paycheck. So if you miss the paycheck, you're going to be stressing out, wondering, okay, oh my gosh, how am I going to eat? How am I going to feed my family? Well, what happens when this next financial crisis does happen? When a lot of these people think, oh yeah, I'm safe, I got my job, I can make things happen because, I got my paychecks coming in. Well, what happens when you miss one paycheck, 2 paychecks, 5 paychecks, 10 paychecks? You don't have a job anymore. You're running around, and say you do pick up a second job, say you do pick up another job because you lost that first one. Well, now maybe your income is less than the first job. You're going to have to transition. You're going to have to learn to deal with less. And what's so amazing here, like during Janet Yellen's speech, she's all talking about how, oh yeah, we're so much stronger in the economy. People are so much financially better off, all this sort of crap. And you guys remember, was that my last episode I did where I'm pointing out, look, 1/3 of people buying new cars have what's considered poor credit. They're subprime loans that are being made right now in the car industry. And I saw a headline that said, Used car prices, they're the lowest they've been since 2009. So car prices have come down, but they're going to come down a lot more. And there's a lot of people out there who have bought new cars who shouldn't have bought new cars. Or they're making payments on cars, and there's a record number of leases out there. So people don't even, when they're making payments to drive a car, I mean, they're not paying to own it, they're paying to lease it. So at the end of the day, when the lease is up, okay, they don't have an asset. They don't have a car. They're going to have to go buy another car. Well, good thing they'll be lower. Good thing they'll be cheaper when it's time to get another car. But will they still have a job at that point? It is just a mess out there. But we haven't seen the worst of it yet. And then I just see what happened because I'm recording this, on Tuesday here. You look at what just happened with the gold price yesterday on Monday. So Janet Yellen, they concluded up their Fed speeches on Friday, August 25th. Well, it come around, you get through the weekend, Monday, the gold price shoots up. On Friday, it really didn't do all that much. But on Monday, the gold price is up over 1.5%. It's up over $20. Gold is at a 10-month high right now. It finally broke through that $1,300 an ounce barrier, which it hasn't been at for right around 10 months. It just it'll kind of flirt with getting close to 1,300 a few times, but it's just been staying down, 1260, 1250, but it's finally broke through there. And so a lot of people who look at charts, that sort of thing, they're looking at, okay, wow, this is really bullish for gold. Gold has finally broken through that barrier. So look, if you're not one of those people who is living paycheck to paycheck, you want a way where you can benefit from what's coming. Now, that sounds kind of callous. Look, things are going to get really bad, but, you got to do what's best for you. If you can benefit from what's coming, or at least not let the politicians destroy what you do have, at least protect your purchasing power, I would consider buying gold, silver, starting before. If you've never made any investments in gold and silver before, I would start with the physical assets themselves. Buy actually gold and silver coins. Look, with everything going on out there, it seems the way we are headed. The politicians, they're going to have to destroy the currency because our economy is run by a bunch of Keynesians. And if you think when Janet Yellen is out of office in February of this next year and Donald Trump appoints a new Fed chairman, if you really think he's going to be an Austrian, you're crazy. I mean, you remember that when Donald Trump was in one of those interviews, and Donald Trump's like, yeah, I'm a low interest rate guy. I'm a low interest rate sort of guy. So look, Donald Trump likes easy money, and he wants to kind of, especially if Donald Trump wants to be reelected as president, so he can serve another 4 years. He doesn't want the economy to come collapsing down under him, and so he's going to reappoint someone that's going to keep the party going, or try to. I really can't see our economy staying together for another 4 years. That is so hard to believe, but I guess it is possible. So you can't count it out, but I guess we'll wait and see, won't we? But I guess, I should make another point here, what I was getting to way earlier on in this episode, with Janet Yellen pointing out, talking about basically her whole speech at Jackson Hole was talking about regulations and how deregulation would be horrible. All the things that the Federal Reserve and Congress has done since the financial crisis about 10 years ago is that they implemented more regulations. You had Frank Dodd. And so she's arguing, and it's like what I was pointing out in that episode a few weeks ago. Look, she's setting up the narrative that, hey, Donald Trump, he wants to reverse these regulations from Frank Dodd. He wants to do all this, trying to have more of a free market in the banking sector, financial sector. Okay, when we have another crisis, she's setting up that narrative that it's not Janet Yellen's fault. Janet Yellen right now is protecting her legacy. She doesn't want to be seen as the one to blame for what's happened when the economy comes crumbling down. Janet Yellen wants to be able to point to, hey, look, they're reversing these regulations that made us a lot more stable. Those regulations what were protecting our economy. And here Donald Trump comes in here. He deregulates. He removes some of these regulations that were passed by Frank Dodd in 2010. And now look, that's the reason why the economy collapsed. She's setting up that narrative. That's the most important point. I read through article after article, talking about, Janet Yellen, Jackson Hole. It was all the same crap all over the place. And so I'm like, what the hell? Okay, I just need to go find. There was hardly any quotes from Janet Yellen in any of these pieces I read. So I had to go find. I just read the whole damn speech myself because I didn't trust what everyone else was writing in their little columns. And the whole narrative on a lot of these articles I did read was pointing out, oh, look at Janet Yellen. She talked herself out of a job because she's talking about how horrible deregulation is, and she was supporting the regulations that are passed with Frank Dodd. So it looks like Janet Yellen, she might not get appointed as the next Fed chairman. And she's not going to be reappointed by Donald Trump. I don't think Janet Yellen ever was really expecting Donald Trump to reappoint her. And Donald Trump sure as hell is not going to reappoint Janet Yellen. So that's all I got from those articles. But they completely missed the point where she's continuing to set up that narrative. It's why she made the point several weeks ago saying that we will never see another financial crisis in our lifetimes. And she based that on because of the regulations we have put in place, mostly thanks to Frank Dodd in 2010. But if you remove those regulations, okay, so we could possibly at that point, we probably will have a financial crisis. So the next crisis will be blamed on deregulation. It's already set up, my friends. So that is why it is important for you and me. We need to educate our friends and our family. They need to understand where we are at right now. And explaining all this, we need to preempt what these people like Janet Yellen, these Keynesians, what they're already trying to set up. The deregulation is to blame. No, it is not. So it is so important that people understand where our position is before things do come collapsing down. It's always the same crap. Time and time again. And so then what are we going to hear when this next economic crisis comes? Yes, it's because of deregulation. So what do we need? Oh, we need more regulations. We need more government intervention in the economy. That will make things so we never have another, say, 2018 economic collapse. And then they'll refer back to, okay, 2008 we had an economic collapse, 2008 an economic collapse, 2000. And every one of these situations, it's Rahm Emanuel. Wasn't he the one that said, never let a good crisis go to waste? Well, here they will be. When the next economic crisis comes, they're going to try to take advantage of it. They're going to try to take advantage of you and me. They're going to try to wipe out our savings. They're going to inflate the currency away. We got to protect ourselves. We got to protect our friends and our family. And we got to help educate those around us. So most people can't be fooled by these damn clowns in Washington, D.C., local government, state government, the Senate, the House, you name it. Any politicians out there, most of these guys have no idea what the hell they're talking about. Most of these politicians out there, do they know anything about running an economy? Nobody can run an economy. Central planning doesn't work. Have any of these clowns ever looked back in history? Central planning collapses every time it's tried. The only question you have to ask is when. You don't know the exact timing of it, but they always do. Fiat currencies always collapse 100% of the time in history. None of them have ever survived. It's always a question of when. So now I ask you guys out there, if you have the available funds, money you could set aside for at least 2 years, money you don't need for day-to-day transactions, for rent, money you can set off to the side. When are you going to invest some money in gold and silver, set it off to the side? Just protect yourself. Protect yourself from these crazy clowns. This is a crazy, insane, out-of-control world. The only stability out there is gold and silver, physical precious metals. You'll say, oh, Justin, no, they're not stable. If you see the gold price and silver price, they're always moving up and down. Well, actually, that's because of the value of the dollar moving up and down. Gold's actually really stable. So anyway, guys, that is all I have for you on today's show. I am losing my voice here. I'm going to have to get a drink of water. Anyway, guys, you can go to my website, catch up on old episodes. Just go to justinmooreshow.com. Moore is spelled M-O-H-R. You can, You can donate to me directly if you want. Go to my PayPal little link there. And if you donate over $50, I'll send you my bonus episodes. Make your Amazon good purchases through my little link there. You click on that, it takes you right to Amazon's homepage. Man, any goods you buy, I get a small commission back. It's not costing you anything extra too. So you're helping me out, and it takes you like 5 seconds of your time to click on the link. So if you guys could do that for me, I will be back here next week, and I'm looking forward to it. This is Justin Moore, signing off.